what should we think about the fact that so many of these loans are being used for consumption purposes rather than for business investment? This is a big issue. It's a big issue because for years, the story that has been told about microfinance is basically that people were borrowing money to invest in their microenterprises, their little businesses, and that these businesses produced additional income which would then raise people's income and their consumption and get them out of poverty. It turns out in numerous studies that, in fact, the usage of the loans is much more diverse. In typical cases, business investment will be a minority of the loan usage, and an awful lot of it is used for different kinds of consumption purposes, not just short-term but also long-term consumption. This is a pretty bothersome finding if your image of microfinance is that the value of it is putting investment into poor people's business and increasing their income. And as a matter of fact, there is a new generation of studies, so-called randomized controlled trials, very rigorous studies of the impact of microcredit. And so far, at least, there is some question being raised by these studies about whether incomes are actually increased by the credit. I would say that in terms of the available studies so far, the jury is certainly out on the extent to which microcredit gets people out of poverty. I think the honest evaluation of that issue is that we simply don't know yet. What is clear is the kind of picture that emerges in portfolios of the poor, that people are using it to smooth consumption and to deal with emergencies and to amass the larger sums of money that they need for various life cycle purposes. This disappoints some people, and if you tell them that microcredit is being used for consumption smoothing when they thought it was getting everyone out of poverty, they tend to say, why bother with it at all? And the reason that a question like that gets asked is that the people who are asking it are people like you and me, whose own basic consumption needs have never been threatened. There has always been food on the table, there has always been clothing, there has always been shelter. And by and large, we have come from households where income was regular enough so that consumption smoothing was not a huge issue. As the book points out, it's a huge issue for people living under $2 a day with their highly irregular incomes. If you gave me a choice between smoothing people's consumption and getting them out of poverty, of course I'd rather see them leaping out of poverty. But the consumption smoothing and the other uses of the loans is very worthwhile in itself, especially when you consider that you can deliver these services without a lot of subsidy. If you gave me a choice between a year's worth of women's primary education or a year's worth of microcredit, which would do the household more good, I'd bet on the year's worth of women's primary education. The problem with the women's primary education is that you have to pay for it again and again and again. Every year it has to be subsidized, paid for by the state or by someone. On the other hand, with the microfinance services, if you do it right, you can put in a relatively small upfront subsidy, and you can have services that go on indefinitely without requiring additional subsidies, and that can expand based on available commercial funding. So in my view, the value proposition of microfinance doesn't lie in its being the strongest tool against poverty that we can possibly imagine. The value proposition lies in the fact that it's very helpful to cope with poverty And it's a very good value for money. It can be delivered with very little subsidy.